If you do establish an SMSF with your spouse and that relationship does break down, you can actually wind the fund up. When you're establishing an SMSF, you'll also need an investment strategy because without one, your SMSF won't be compliant. There may be some things that you might miss, and so it's not just the low cost of setting it up. There might be some opportunity cost and missing out on purchasing a certain asset and the fund not being compliant. Welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services, and over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. Just a quick disclaimer and just a reminder that this is not personal advice, so make sure you speak with a licensed advisor before making any investment decision. Hi guys, welcome to SMSF Insider. Today we'll be talking about costs of establishing an SMSF. That cost does vary between providers. We've seen as little as $1,000 from an online provider to all the way up to $10,000 for a full SOA and statement of advice and from a financial planning firm. And obviously there's a happy medium somewhere in between. So it also comes down to, so the cost will depend on a couple of things. Do you have individual trustees, or are you going to have a corporate trustee? And also, are you going to require a bare trust? If you're requiring a bare trust, you'll also need a second corporate trustee. And also, if you're buying more than one property, you'll need more than one bare trust. So it really does depend on the complexity of your individual circumstances. But certainly, if you have a strategy in mind, please reach out and we'd be more than happy to provide you a quote. Drop a comment in the comment section below or just reach out to us and we'd be happy to assist. So if you are setting up an SMSF yourself and you're doing it through an online provider, there may be some things that you might miss. And so it's not just the cost, the low cost of setting it up. There might be some opportunity cost and missing out on purchasing a certain asset and the fund not being compliant. So in addition to that, there are providers that will do a basic service, just providing your trust documentation. But then but they might not do the rollovers, they might not set up the bank account. So it really depends on the level of service that you're being provided. If you're receiving a full turnkey service where you're receiving not only the trust documentations, but you're getting assistance with establishing the bank account and the investment strategy and the rollovers, and also reviewing any insurance requirements, then certainly that level of service may be higher than certainly an online provider that's just providing you with trust documents. I mean, anyone can really do that. So it really does depend on firstly the trustees, whether you're having two individuals or a corporate, and then the level of service over and above that with bank account establishment and the rollovers. So if you are doing it yourself, there is certainly might be a lower cost provider online, but as I mentioned before, that might present opportunity, the loss of opportunity with purchasing into a certain asset class. In addition to establishing the fund, if your strategy includes purchasing property, for example, you may need your provider or somebody to be liaising with your solicitor, with your mortgage broker, with your existing super fund. Now, an online provider is probably not going to do that for $990 or thereabouts. So if you are requiring a full turnkey service and you are purchasing something like property, you may want to consider a more high-end solution or high-touch solution or premium service that's going to help you purchase that asset in a compliant way, and also getting the fund set up and having your fund provider liaise with the other professionals, including the solicitor and mortgage broker. So when you are purchasing property as well, solicitor may require certified trust documents. Again, a low-cost provider is probably not going to do that for you. So when you are talking to your SMSF provider, just ask them if they are able to certify your documents and liaise with your solicitor, because typically they will require those documents if you are purchasing property. Another one is when you are setting up your SMSF, be sure to or ask your SMSF provider if you are able to pay for your establishment costs from once your fund is set up, as opposed to upfront and being an out-of-pocket expense and then the fund having to reimburse you later on. If you can find a provider that will help pay for those costs once, or carry that cost all the way through to the very end of the process, and then they can deduct their fees right at the very end, that also might save you the out-of-pocket expense. So the range does vary in costs depending on the level of service that you require. But if there's a specific case that you have for us, please drop us a line and we're more than happy to help. Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode. So the costs will vary depending on what assets you have, more specifically around property, because if you have some gearing inside your property, or have an LRBA or a limited recourse borrowing arrangement to purchase property, then you will require a bare trust. So the cost will naturally be higher, because in addition to the bare trust, you'll also need another company to sit in there as a corporate trustee. Otherwise, the lenders won't lend to that entity. So if you are having if you do have a strategy that includes property and gearing, the cost will naturally be a little bit higher. So the major benefit when using a premium service offering as opposed to an online provider is that you will have the ability to ask questions, and obviously have someone hold your hand through that process. And you'll also have a premium provider that's helping you establish your fund, whether it be a financial planner or a premium SMSF service. They will be more than likely going to help you with establishing a bank account, or helping you with your investment strategy, helping you with your rollovers. So that's the main benefit of using a premium service, is that you will get more assistance when establishing your fund. When establishing your SMSF, there's a few things that you'll need. You should have your tax file number handy. You'll need to provide your place of birth. You'll need 100 points of identification, and you should need some recent super statements. So with all of that information handy, it will make the process of establishing your SMSF much easier for whoever's doing that for you. But essentially, those are the key items or key pieces of information that your SMSF provider will need when establishing your SMSF. When you're establishing an SMSF, you'll also need an investment strategy. So with an online provider, I'm not sure whether that you'll receive an investment strategy, whereas with a more premium service, they should be helping you with establishing your investment strategy, because without one, your SMSF won't be compliant. So your investment strategy is essentially a document that outlines where your assets or where your money is going to be invested, and what percentage of your money is going to be invested in those assets. So without that investment strategy, the fund will be deemed non-compliant. It also needs to cover off that you've also considered insurance coverage within your SMSF. And without that document and all that information, as I said, your fund will be deemed non-compliant. So make sure your investment strategy is included in the establishment of your SMSF. We do get asked a lot whether purchasing property through your SMSF is the right strategy. So probably one of the first things you should do is perhaps talk to a broker around your borrowing capacity for your SMSF. Once that's been established, then you can decide whether purchasing a property inside an SMSF is the right strategy for you. If your borrowing capacity comes in quite low and that's not really going to buy you anything, then it's probably not the right thing for you. But if the borrowing capacity comes in much higher and gives you a lot of property options, then perhaps the strategy could be right for you. But certainly, before making any investment decisions, seek personal advice. Seek some advice from your investment professional. So if you do establish an SMSF with your spouse and that relationship does break down, you can actually wind the fund up. So you might have both of you decide that you want to wind the fund up, or one member might decide to keep the fund open and one might decide to go back to their existing super fund. So either way, the fund can be wound up. Just speak to your SMSF provider or specialist about how to go about doing that. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at BlueChipSMSF or book a call with our team to see if we can help you.